Listen, that is the sound of a timer. Not a clock counting up, but a fuse burning down. It's buried deep inside the engine of the global economy, an engine that runs on a fuel more dangerous than oil, more volatile than gas, debt. $100 trillion of promises, of IOUs, of tomorrow's money spent today. And we all feel the shudder, the inflation that steals your paycheck, the bank scares that flash across your screen, the nagging sense that the numbers are going up, but your security is going down. What if I told you there's a single gauge on the dashboard of this whole rickety machine that has screamed a warning before every single economic meltdown for half a century? Not a stock index, not a bond yield, a metal, the one they laugh at on Wall Street, the one central banks quietly stockpile, silver. And right now, this very second, the gauge is not just ticking, it's slamming into the red. After the 2008 crash, while CNN showed empty trading floors and politicians promised recovery, silver did the unthinkable. It didn't just recover, it detonated. A 400% gain in 3 years, turning $9 into nearly $50. That was not an anomaly, that was a signal. A brutal, flashing, undeniable signal that the rules of the game had changed forever. And this month, after the latest market tremor, after a dip that should have broken it, silver just rebounded. Violently. This isn't a story about a commodity. This is a 5-alarm fire for the global financial system. For your job. For the dollars in your 401k that are slowly, silently turning into confetti. Stay with me. Because if you can decipher this signal, if you can understand why this forgotten metal screams when everything else is silent, you won't just see the danger. You'll see the single greatest wealth preservation opportunity of our lifetimes, but you have to see the pattern first. And to see the pattern, we need to go back to the day the fuse was lit. It's August 15th, 1971. President Nixon addresses the nation. With a few words, he does the unthinkable. He severs the final link between the US dollar and gold. The Bretton Woods system is dead. From this moment on, the world's reserve currency is backed by nothing but faith. A promise. It was called the Nixon shock for a reason. The entire global monetary system became an experiment. But here's the part of the story you never hear. Just 3 years later, in 1974, the US government quietly passes a law. It becomes legal, for the first time in 4 decades, for American citizens to own gold bullion again. Stop. Think about that. The government just created a system designed to move away from gold, to make it irrelevant. Then, almost immediately, they turn around and say, by the way, you can now buy it? Why? It makes no sense. Unless gold and its shadow silver were never meant to be irrelevant, unless they were meant to be the pressure valve, the release. The government knew the experiment was dangerous. They knew faith could fail. So they gave the public an escape hatch, a place for fear to go. Because when people lose faith in paper, they don't buy more paper. They buy what paper can't be, something real, tangible, finite. They buy precious metals. And that release valve has blown open with terrifying predictability every single time the system has overheated. Fast forward, the year 2000. The dot-com bubble, a fantasy of infinite growth built on websites with no revenue, pops. Trillions vanish. And in the ashes, a quiet stir. Silver, left for dead below $5 an ounce, begins to creep. Up. It's not a surge, it's a whisper. By 2007, as the housing market starts its drunken stagger, silver is already marching. Then, September 2008, Lehman Brothers collapses. The world stops. In the sheer blind panic, they sell everything. Everything. Even silver gets tossed overboard. But then, the response. The real story. The Federal Reserve, the Treasury, central banks worldwide, they pull the ultimate lever. They create money. Out of nothing. Trillions of dollars, euros, yen, some so large the human brain can comprehend them, are conjured into existence to bail out the banks. And in that precise moment, the signal flashes. The smart money, the old money, the money that remembers 1971, looks at those trillions being printed and asks one terrifying question. If they can do this once, what stops them from doing it forever? The answer is nothing. And so they don't buy the recovery, they buy the hedge against the recovery. They buy silver. Not because the economy is getting better, but because the cure, the endless printing, is a disease for the currency itself. And silver goes ballistic, 400%. While the stock market is still limping, silver is screaming the truth. Your money is being systematically devalued. Now, look at your screen today. The last 4 years have been a doctoral thesis in money printing. Pandemic stimulus, inflation response, bank bailouts 2.0. The scale makes 2008 look like a practice run. And through it all, silver has been doing something fascinating. It's been volatile, yes, but it has held critical levels. It has built a foundation. And on every single dip, every moment of market fear, it finds a floor, and then it pushes back up. Hard. This recent rebound isn't an isolated event. It's a pattern. a repeating echo of that 2008 signal. But this time, something is different. The fuse is shorter, the powder keg is bigger. And that's because of silver's secret, its split personality, a duality that makes it the most sensitive gauge on Earth. Personality 1, the industrial workhorse. It's in the phone in your hand, the screen you're watching me on, the car in your driveway, every single solar panel and electric vehicle we're building for the future. It is the most conductive, reflective, indispensable metal we have. No AI, no green energy revolution happens without it. That's the bull case you hear about, but it's only half the story. Personality 2, the ancient money. For 5,000 years, across empires and collapses, silver was money. It is tangible value in a digital world of promises. When confidence in those promises erodes, this personality wakes up. And right now, confidence is not just eroding. It's being actively questioned by the very architects of the system. Let's make this concrete. I want you to imagine you run the pension fund for the state of California. You have $500 billion to protect for teachers, firefighters, civil servants. Your mandate is safety, but you look at your tools, bonds. With inflation, they guarantee a loss in purchasing power, a guaranteed loser. Stocks, trading at extreme valuations, hooked on easy money. Real estate, illiquid and peaking. You are trapped. And then you see the most shocking data point of all. For the last 2 years, the biggest buyers of gold in the world have not been hedge funds or billionaires, they have been central banks. The People's Bank of China, the Central Bank of Russia, India, Turkey, Poland, Singapore. The very institutions that have the power to print unlimited currency are stockpiling the unprintable. They are hedging against their own product. What do they know? What are they seeing on their private dashboards that we aren't? They are seeing the end of the monopoly, the slow, painful, chaotic move away from a dollar-dominated world. And if the giants are buying gold, what is the leveraged, explosive play on that same insight? It's silver. Poor man's gold is the wrong term. It's smart money's accelerator. Every dollar of fear that flows into gold creates $10 of momentum for silver. That's what the rebound is telling you. The giants are moving, and their shadow is falling on silver. Now, let's add fuel to this fire. Literally, the supply bomb. This is the part that turns a financial signal into a physical crisis. We are entering the greatest industrial demand surge for silver in human history at the exact moment its supply is the most fragile. A single electric vehicle uses up to 50 grams of silver. A solar panel? About 20 grams. We need millions more of both, every year for decades. But here's the cruel twist. Over 80% of silver supply doesn't come from primary silver mines. It's a byproduct. It comes from digging up something else, usually copper, lead, or zinc. So follow this logic. If the global economy slows down, what happens? Demand for copper, for industrial base metals falls, mines scale back or shut down. And when they do, the supply of silver, already struggling to meet its own booming demand, gets strangled. We could be heading into a scenario where industrial demand is soaring, monetary demand is exploding, and physical supply is collapsing. That isn't a recipe for a price increase, that is a recipe for a shortage, for a scramble, for a moment where the paper market for silver and the physical reality of silver violently divorce. The rebound we're seeing is the market beginning to sense that fracture line. Let me ask you a direct question. When you look at your investment portfolio, what is it actually made of? Bits in a computer at Fidelity, digits on a Vanguard screen, promises, IOUs, claims on future cash flows. Now imagine a scale. On one side, you pile every financial asset in the world, every stock, every bond, every derivative. It's a mountain of digital claims. On the other side, you pile every single ounce of investable silver above ground that you can actually hold in your hand. It's a small chest. The digital mountain is infinite. They can, and do, create more of it every second. The chest is finite. It grows by a trickle. Now, light the fuse of doubt. A bank fails. A debt ceiling fight goes to the brink. A country announces it's settling oil trades in something other than dollars. Which side of that scale do you want your wealth on? The infinite promise or the finite reality? Silver's rebound is the first quiet click of the scale beginning to tip. This is not about being a doomsayer. This is about being an insurance actuary. You insure your car, you insure your home, you insure your life. Why? Because you acknowledge risk. So let me ask you, what is the single greatest risk to your life, OS savings, over the next 10 years? It's not a stock market crash. You can recover from that if you have time. The single greatest risk is the permanent devaluation of the currency you measure your wealth in. It's the silent theft of 2%, 5%, 10% of your purchasing power every year until your retirement plan is a hollow shell. That is the blaze. And allocating a small percentage to tangible assets like silver is not speculation. It's your financial fire insurance. The violent rebounds, those are the premium notices, and the premiums are going up. But here is the ultimate cliffhanger, and the thought that should keep you up at night. What if this isn't just a cycle? What if 2008 wasn't a crisis, but a symptom? And what if the signal we're seeing now is pointing to something far more permanent than a recession? What if it's the early tremor of a monetary reset? For 50 years, the US dollar has been the sun in our economic solar system. Everything revolved around it. But today, from Beijing to Moscow to Brasilia, countries are building alternative systems. They're trading in their own currencies. They're stockpiling gold not as an investment, but as a strategic asset for a new monetary order. Where does that leave the dollar? And in a world of competing paper promises, what is the one neutral, apolitical, universally accepted form of money that predates them all? Precious metals. This rebound might be the first early bet that the 50-year era of dollar supremacy is entering its final volatile chapter. I want to pause right here. This is a lot to process. So tell me in the comments, does this frame make sense of the chaos you are already seeing? When you look at your grocery bill and your shrinking savings, what feels like the bigger threat? The stock market crashing, or your money simply buying less and less? Let's talk about this. Now back to the signal, because timing is everything. The 400% move after 2008 wasn't a smooth ride. It was a war. A brutal war between fear and hope, between physical and paper. The people who profited weren't the day traders. They were the ones who understood the signal before the panic, who bought during the fear, and who held through the doubt. They positioned themselves before the central banks even admitted what they would do. Today, we have an even clearer signal. The central banks are trapped. Publicly, they swear they're fighting inflation. Privately, their balance sheets, the true measure of money printing, remain bloated beyond belief. They are trying to fight a fire with one hand while pouring gasoline with the other. They must choose: crush the economy with high rates to save the currency, or print to save the economy and destroy the currency. Look at 5,000 years of history. The choice is always the same. They will print, they will devalue. They will choose soft default. And silver, rebounding now, is placing its bet. So what do? First, reframe your mind. Stop seeing volatility as risk. See it as the market's sorting mechanism. These sharp dips and violent rebounds in silver are the shutters of the old system. They are shaking out the weak hands, the short-term paper traders, before the real move. Second, become a signal reader, not a headline reactor. When you see silver jumps on banking fears, don't think, oh, a safe haven trade. Think, the market is anticipating the central bank response to those fears. More liquidity, more debasement. You're not trading the crisis. You're insuring against the cure. Finally, this is about more than an asset. It's about a fundamental shift in what wealth is. For 2 generations, wealth was built by borrowing cheap digital dollars to buy more digital assets. That game required one thing: constantly expanding faith in the dollar system. That faith is now contracting. The next chapter will be about owning scarce, tangible, essential things that exist outside the digital ledger. Things no central bank can create with a keyboard. Silver, with its foot in both the industrial future and the monetary past, is the ultimate avatar of this shift. Its rebound is the first faint heartbeat of the new system. As we finish, remember this. In a world of noise, of screaming TV pundits and algorithmic headlines, the most important truths are often silent. They are the patterns that repeat, the gauge that flickers the same way before every storm. For 50 years, through stagflation, through the dot-com bust, through the great financial crisis, a silent metal has screamed a warning when the system's faith was failing. It is screaming now, not with a siren, but with a rebound. A defiant, powerful, relentless rebound in the face of fear. You can dismiss it as a rock for conspiracy theorists, or you can hear it for what it is, the most urgent financial signal of our age. The choice and the consequence is yours. If this connected dots for you, if it gave a name to the unease you've been feeling about your money, then pay it forward. Share this with one person who needs to hear it. Start that conversation. And if you're not already with us, subscribe. Hit that button. Because we are just getting started. Here, we don't chase the news. We decode the signals that make the news. We follow the fear, the greed, and the metal to the truth. I'll see you in the next one.